What is going on, YouTube? And welcome back to the ClearCryptos education channel. My name is T. Haas from the Crypto Shop. And of course, I got my man Jay Seals with me. What's going on, brother?
What's good, everybody?
Well, today was the big day, ladies and gentlemen, and it did not go off without fireworks. As we are filming today is April 12th at 5:34 Central Standard Time, and we finally got the release of the CPI data. After that, the market rallied, and then we got a huge dump. That dump was because we also got the release of the FOMC minutes. Myself and Justin are going to take you through what actually happened. So, Justin, if you would, please bring up the article.
Yeah. So the Fed finally used the unspeakable, didn't want to say the whole word, the R word, aka a recession. And they think it might happen this year. So let's get right into it. Fallout from the US banking crisis is likely to tilt the economy into recession later this year, according to the Federal Reserve document released Wednesday. Minutes from the March meeting of the FOMC included a presentation from staff members on potential repercussions from the failure of Silicon Valley Bank and the tumult in the financial sector that began in early March. Though Vice Chair for Supervision Michael Barr said the banking sector is sound and resilient, quotations, staff economists said the economy will take a hit. Given their assessment of the potential economic effects of the recent banking sector developments, the staff projection at the time of the March meeting included a mild recession starting later this year, with a recovery over the subsequent 2 years. 2 years of being a recession, ladies and gentlemen. That's a pretty long time. Projections following the meeting indicated that Fed officials expect GDP of just 0.4% for all of 2023, which is not good. But the Atlanta Fed right now is tracking Q1's gain around 2.2%. So that means that we're going to pull back from that 2.2%, which is not a good thing. That crisis had caused some speculation that the Fed might hold the lines on rates, but officials stressed that more needed to be done to tame inflation. And we know that. They keep saying we're not calming down on these rate increases. We got to do more. And we're going to talk or if you keep watching Clear, then you'll see our CPI video. But more definitely needs to be done if they want to tame CPI. But FOMC officials ultimately voted to increase the benchmark borrowing rate by 0.25 percentage points, the ninth increase over the past year, and that brought the Fed funds rate to a target range of 4.75% to 5%, its highest since late 2007. So we got a huge bombshell today. The market definitely reacted to it. But Hobbs, how are you reacting to this recession fear news popping its ugly head back up yet again?
Look, did you just say recession for 2 years?
Oh
my God. That's all I really got to say about that. This is absolutely crazy. First, things that the Fed don't do. They don't do things that they don't really want the market to react to. The fact that they allowed the FOMC minutes to come out with the R word in it after a year of FOMC minutes where they completely denied the R word was completely on purpose. If you think it was an accident, you're living under a rock. The Fed has been quite clear with the market the last time he spoke. He said that the Fed is going to continue to be transparent with the market so that the market can react to what they're trying to do. If that transparency holds true and they decided to use the recession word over the next 2 years, then they're expecting for the market to react in a negative fashion. If we were to take a look at these charts, I promise you the market dumped 30 to 50 points just off reading this. And as you can see at the top up there, stock futures are little changed now that they're reopened as investors mull over what? Recession risk. The only thing investors heard in that entire FOMC minutes was the R word. That was a surprise to almost everybody who read it. I'm not saying that the recession is definitely coming. What I am saying is the Fed thinks it's coming, banks think it's coming, and all of your big time tech stocks have been telling you that it's potentially coming in all of their earnings reports. Thing you need to watch for next, earnings reports for the banks are coming out again. In addition to that, tech stock reports are going to be coming out again. This next earnings season could potentially push us into what's considered an earnings recession due to the horrible outlooks and the poor performing or underperforming stocks and or banks could immediately push us into a recession. However, there is good news at the end of the tunnel. It's not all gloom and doom. Recessions is where the most money is made. So whether you're in crypto or you're in stocks, you want to be getting ready in your cash position, because if the market pulls back, you're going to get some great opportunities to buy stocks and your favorite cryptos at the bottom. And you better be adding ClearCryptos to that list. That being said, you guys, please let us know what you think in the comments down below. Don't forget to hit the like and subscribe button. Come on back over to the ClearCryptos education channel. Check out myself and Justin, but we will catch you guys on the next one, man. Peace.